people are buying some really stupid stocks, and we got to stop talking about those stupid stocks and get back to what actually makes people wealthy. And of course, the stock market being so unpredictable, we really don't know, but there's ways that we can at least be ahead of the curve. Let's talk about two really quick articles. I'm going to share with you exactly what I do when I pick on a stock so we can stop picking these stupid stocks. Look right here on CNBC. It says, are you feeling nervous about your portfolio today? The classic Wall Street advice dictates that good investors should know when to cut their losses short. And certainly some folks get lucky and manage to time trades perfectly so as to sidestep big market drops. But hold on a second. It goes further to say in this article over here that investors sell winning stocks too early regardless of their demographics. Now, when it comes down to selling the stock too early, that could be something like, let's say you bought Tesla, you sold it back in 2018. You're probably kicking yourself right now. I bet you might be, because, if you put $10,000, get ready for this, $10,000 in 2011 on Tesla and just let it sit there, today that value would be worth over $1 million. But if you sold too early, you don't have $1 million. But the same thing goes in the reverse. Some people say, well, things are going down, and this little stupid stock that I was advised to get because I watched some stupid video on somebody that just made sense to me at the time, I went in, it dropped, and I'm just gonna hodl, because the reason I wanna hodl is because it's going to go back up. Well, and the question would be then, why is it going to go back up? And then the answer is, well, it just looks like they're going to do a good job. But there's no fundamentals behind that. And that's the whole problem. If you don't have any fundamental research behind the company, you're just throwing your money away and hoping that the magical money fairy well, it's like the tooth fairy. You're just hoping that you're going to put some money under your pillow and the tooth fairy, or the money fairy in this case, will give you more money. If it sounds ridiculous, it's supposed to sound ridiculous, because that's what's happening in the YouTube space. And I'm going to come clean with you and explain that I know for a fact that some of you who have followed me for a while are going to be like, but you talk about weird investments like Shiba Inu. I'm gonna expose myself, but I'm also gonna expose the stoppage that we need to have of some of these stupid stocks. Let me give you some examples. Let's go over here to Seeking Alpha, for example. And in the case of, if you hear of any type of stock that somebody thinks that it's gonna 10x, 20x, or 30x, you need to say, okay, that's cute, that's interesting, I'm gonna do some research on my own. The point is, you need to be the one in power so you can make the best decision, so you can make a ton of money. And what you don't wanna do is just take their word for it because they sound cool and they sound like they know what they're talking about, and then before you know it, you're left holding a bag like a lot of people are right now who bought into things like Voyager, and they're like, oh crap, or Coinbase, or really anything like that. Even, this stock right here, Beachbody, B-O-D-Y. So you buy into something like Beachbody because you think, man, it's going to go to the moon. Look what moon it went to. I don't think it went to the right moon. It is down 84% on the year. 84%. So if you bought when it first came out of that SPAC, look at this, a 1072 a share in July of last year, 1072. Let's say you YOLO'd a lot of money into that. You're hurting right now unless you sold it on the way down somewhere here, but why would you buy this without doing some fundamental research? And that's what I want to share with you in this video today. Stop buying dumb stocks. Right here's what you want to do. You want to look at the following metrics. Number one, the price to earnings ratio. Historically, 13 to 15 is the PE ratios of most companies. And in the case of something strong, maybe 25. Okay, fine. But if it's something really high or really low, you should be a little bit concerned about that. And in this case, there's literally no PE ratio, as you see right here on Seeking Alpha, because it is a newish company to the stock market. Beachbody's been around for a very long time, but it's new to the stock market. Doesn't have quite the calculation for the PE ratio. But let's move on to number two. We want to look at the EPS versus the analyst. So the analysts, the people out there on Wall Street and some of the investor analysts, they put together their thoughts on the earnings per share. And then we look at the actual, like how is the company actually doing? If you scroll on something like Seeking Alpha, you can see that quarterly, they're looking pretty bad. Look at the negatives. This should not be going down, it should be going up. If we look at the annual, we come over here and click on annual, this looks just as bad. We're going negative. We're supposed to be going positive when it comes down to earnings per share. Number three, we need to look at revenue growth. Is this company actually growing their revenue? You come up here to something like the financials, all of this stuff is available. You could even go on the company's website and look at their own reports to see how they're doing. And this is what the smart investors do. They look at the fundamentals. Look right here. 790 to 755 to 863 to 873. Now that looks pretty good, but that brings us to the next point. What's their profit margin? You could be making all this revenue and looking hot and sexy, but are you spending so much money that you're actually not making any type of profit? Come down here on the front page and we look at the profitability. You can see the gross profit margin at 56.7%. However, the margin is in the negatives, as is the return on equity, as is the return on assets. This is looking terrible. That's why Seeking Alpha is giving it an F rating on this particular case. And that is just bad. The momentum is bad. After you look at profit margin, you move on to the next step. Number 5 is their assets versus their liabilities. So basically, how much do they own versus how much do they owe in liabilities? And if there's a negative number on that, they're also looking pretty bad, which means if they sold off everything, are they still positive? Can they still float? Can they still pay back their investors if they have to liquidate the company? So if I go over here to Financials tab and I click on the balance sheet for this, we're going to see the same type of thing here. I'm going to give you another stock example in just a minute, but because I don't want to just beat up on this particular company. But if you look at their total assets, there we go, 544. Their total liabilities right now, which is up here, total liabilities at 226. That's looking pretty good, so that's great. Ownership potential. Are they issuing more and more shares to raise more capital, which means your shares and your ownership of the company is basically getting diluted? And that's really it. PE ratio, EPS versus analyst, revenue, profit margin, assets versus liability, and ownership. 6 steps that you can look at. If you want, if it's a dividend paying company, you can look at the payout ratio. But if you look through and you truly look at what is going on with these type of companies, you're going to quickly realize that, hey, they're actually not performing as well as they probably should be. Look at the operating income, for example. The operating income is in the negative because they just released a few other things. Now, a lot of people will get into this trap to say, yeah, but you don't realize that they're about to introduce this and they're going to be doing that and they're going to be issuing X amount of widgets over the next 5 years. But the problem with that method, the problem with that mindset is that the fact is you're saying they're going to. We need to see results, especially as fundamental investors. You don't want to just wish and hope and pray, because the issue with that is they may not actually do it. They may not actually be able to perform, or if they do, it might be a complete flop. Don't worry, if you then find that this company all of a sudden starts cranking it and starts doing things and starts actually putting the pedal to the metal, so to speak, well then what we're going to start seeing is a much better financial report. And then when we see a much better financial report, guess what that means? Buy opportunity potentially. And if it's a buy opportunity because they are producing, theoretically the price would then go up because there's going to be more valuation on that particular stock. Guess what else? The hedge funds, the big money, all that kind of stuff will also start flowing into the stock. There's a reason this is sitting at $1.38 because it's a sleeper stock, because nobody really is trusting and believing in what they have going on. The same thing can go for something like Tattooed Chef that somebody was asking me about the other day. Same type of deal here, 674. And if you go over to the summary tab, look at what has happened to this particular fund over there. Look, in 1 year, it's down 66.22%. If you look behind the curtain, and we look at the PE ratio, which you can see the PE ratio is also blank here. The earnings per share are in the negative. Look at the revenue, look at the profitability, look at the ownership potential. Look at all these smart steps. Every time you hear about a stock, you can make a much better decision and at least have some fundamentals behind what's happening. Then, if they start producing what they say they're going to produce, you can get more excited. A lot of people think, yeah, but I can get in on this and then it's going to ride up once they start producing. Don't worry, you're not going to miss the boat, because once it starts rising, you can jump in on it and still go up. Guess what? I actually, in one of my newest brokerage apps, decided to invest in Apple a couple weeks ago. Actually, no, it was 2 months ago. And of course, what has been happening over the last 2 months? The whole stock market's going down, down, down. Every month it keeps going down. We've had a terrible 2022. But it's funny to me that Apple right now is up. I'm actually up. I'm in the green on Apple. Could it still go back down? Of course it could. But I'm doing fundamental analysis on that company. I'm keeping my eye on it. If it shifts and goes the opposite direction, that could be an opportunity to sell, but with the idea that I'll still be up on my money. But a lot of people just keep throwing out these funny, random stocks that don't make any sense without some fundamental research. Now, I'm gonna call myself out, because even though I just gave this preach about, fundamental analysis and making sure that we're buying the right type of things and the right type of stocks, you gotta pause and think, what about all that weird cryptocurrency I talk about, right? Like, what about Shiba Inu? Well, Shiba Inu is a little bit of a different game for me. When I look at my overall portfolio, I'm investing primarily into good value companies, and most of my money, honestly, is going into index funds. Index funds are easy because then you don't have to do all this like weird analysis that we just talked about. You don't have to go on and look at every single individual company. Instead, with something like, an S&P 500 company, you own everything, or at least a portion of the top 500 companies. Or a total stock market index, you own everything in the stock market. That's kind of cool. You don't have to worry about it. You just invest, set, and forget. And don't worry about it. Up, down, doesn't matter. It's about the long game. I invest in that kind of stuff first. Then, for fun money that I would typically take and use at a bar, or eat food with it, or buy something with, that's fun money I'm throwing away, right? That's the stuff I'm going in on cryptocurrency. And because I'm so excited about SHIB and what they're actually doing, and the fact that I got in early on SHIB, it makes it kind of exciting, obviously, right? Because as this goes up or down, it doesn't really matter. If the thing goes down even more and I continue to lose tons of money, and let's say I'm down $1,000, who cares? I don't really care. It's money I don't need. The money I need and grow and want to grow, well, that's obviously either in my expense account or it's in my portfolio, safely protected, right? But if it's in a cryptocurrency, I know it's volatile. I know it's going to go up, down, sideways, upside down, and inside out, which is why you always got to make sure that your financial foundation is set up correctly before you jump in. And if you have questions about that and you'd like to see more on that, how to actually set up your financial foundation the right way, let me know down in the comments, and I will dedicate a video series just for you so I can help you get off on the right foot. Because if you're facing a mound of debt and you're not sure how to make the ends meet at the end of the month, I'd love to help you out a little bit more, and even for free. You heard me, it's true. So the next time you hear somebody, even myself, talk about any type of stock that has to do with anything, oh, this stock is looking pretty good, there's this, there's that, say, that's cool. Do your research before you jump into it. Always take a step to look at what you're doing before you jump into something that's going to leave you butthurt at the end of the year, like something like this. You don't want to be down all this money and then have that thing to say, am I either going to hold on to this because I'm just hoping it'll go back up, and as long as if I don't sell, I'm not actually taking a loss, I'm just down on paper, or do I just cut my losses and maybe move that money into another stock and hope that goes up? Stop the repetitive cycle of crap, guys. You're better than that, you're worth it, and you're awesome. And I want you to live the ultimate sweet life. If this video was helpful, if you like these kind of rants, drop me a comment down below so I can keep making them. I got so much more to whine and complain about, and it's so much fun. So check out this video next. We'll see you on the next video.